PayPal is about 2 weeks out from reporting their Q2 earnings. So in this video, we will take a look at what analysts are expecting around this Q2 earnings report, as well as some guidance the company provided during their Q1 report. And I'll leave off the video by giving my opinion on the things that I'm going to be keeping an eye on around this Q2 earnings report. So if you enjoyed the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. Year to date, PayPal has traded sideways, with the stock down only 2%. However, over the course of the last year, we've seen the stock trade all the way down to $50 per share and all the way up to $75 per share. So with a current stock price of $60, we're basically trading in the middle of that range. For a little bit of context, leading up to their Q1 earnings report, PayPal ran up about 9%. However, after their earnings report till now, the stock has actually dropped about 11%. And during that Q1 earnings report, they came through with revenue of $7.7 billion, which was up 9% year over year, and their GAAP EPS increased 18% year over year from 70 cents a year prior to 83 cents in this quarter. One thing that's important to keep in mind as we look through these numbers is PayPal made a change to how they report their non-GAAP EPS numbers in the first quarter of 2024. They actually are now adding in stock-based compensation expenses as well as related employer payroll taxes, and those are now being reflected in their non-GAAP EPS. So that's important to keep in mind when you look back at some of these numbers, because if we look back at Q1, we can see that they reported non-GAAP EPS of $1.08 versus expected of $1.22, which makes it look like they missed their EPS numbers by about 11.5%. However, when you take out these stock-based compensation expenses as well as tax expenses, they actually would have reported $1.40 of EPS. And $1.40 of EPS would have been up from $1.17 of EPS in Q1 of 2023, which is about 20% growth year over year. And I'm going to assume that analysts have made adjustments for this, because we can see here on Google that PayPal is expected to report their earnings on July 30th for the second quarter, and analysts have an EPS estimate of 98 cents and a revenue estimate of $7.81 billion. And if you only look here on Google, it almost looks like year over year PayPal's EPS numbers are falling. However, this is solely due to their change in how they are accounting for their non-GAAP EPS numbers, because a year ago they reported $1.16 of EPS and revenue coming in at $7.29 billion. You can go on PayPal's website and find their Form 8K. This is a form that is submitted to the SEC, and it actually shows over time what these changes would have done to their non-GAAP EPS numbers. Specifically, we are going to look at their June 30th, 2023 quarter. Their GAAP EPS for this quarter came in at 92 cents per share. However, their non-GAAP EPS number came in at $1.16 like we previously saw on Google. With these adjustments, that subtracts about 29 cents of EPS and drops their new non-GAAP EPS number down to 87 cents per share. When we put all of these numbers together, in Q2 of 2023, PayPal reported a non-GAAP EPS number of 87 cents. In Q2 of 2024, analysts are expecting them to report a non-GAAP EPS number of 98 cents. This represents growth year over year of about 12.5%. And in terms of revenue, PayPal growing from $7.29 billion in Q2 of 2023 to $7.81 billion in Q2 of 2024 represents a growth of about 7% year over year. And this is actually a little bit interesting because these analysts are expecting PayPal to grow on the higher side of their estimates. In Q1, PayPal provided their own guidance on Q2, and they're expecting revenue to only grow by about 6.5% and non-GAAP EPS numbers to grow in the low double-digit percentage. So right now, analysts are a little bit on the higher side with 7% revenue growth and 12.5% non-GAAP EPS growth. So when I look at these two metrics, EPS and revenue, I think that EPS stands out as being a little bit more positive, because if we see them put up a GAAP EPS number of around 95 cents per share or greater, that will actually get their trailing 12-month EPS to above $4 per share. And that'll be the first time that we've seen that since 2021, when they were putting up GAAP EPS numbers anywhere from $4.10 all the way up to $4.40. However, revenue is where there's a little bit more concern, because if they're only growing their revenue numbers by 6.5 to 7% year over year, that is around the lowest levels we have seen over the course of the last 5 years. Granted, they did have a large pull forward in demand in 2020 and 2021. However, their growth has slowed significantly significantly since then and has been in the upper single digits. I really want to see them get back above that double digit mark to maybe 10 to 15% growth year over year. I did want to comment real quick on Yahoo Finance and some of these numbers. Because of these adjustments that PayPal made, a lot of these numbers are thrown off. So you really need to pay attention when you're looking at these, because the high estimate here is sitting at $4.74. I believe that this is prior to any of those adjustments being made. So some of these analysts need to get caught up on some of their estimates, because the low estimate is sitting at $3.73 and the average estimate is $3.90. And this is much more in line with what I would expect based off these new adjustments that PayPal has implemented on their non-GAAP EPS numbers. And the reason that $3.90 is probably more realistic is because when we look back at their Form 8K, we can see their total for 2023 based off their new non-GAAP EPS methodology. And that would have came out to $3.83. So $3.90 would basically be flat year over year. I'd love to see more growth on their EPS front. However, PayPal seems to be sandbagging a lot of their numbers, which I hope to see them come through with very solid beats in this next quarter. And also keep in mind, because of these adjustments that have been made to how PayPal is reporting their non-GAAP EPS numbers, that also affects their forward P ratio, which is now sitting at a 14.31. So just keep in mind that some of these numbers year over year are going to look a little bit weird. That has to do with how they are accounting for some of their stock-based compensation as well as taxes. It doesn't have to do with the underlying business. It's important to understand that and know that PayPal's business is relatively in a similar position to where it was a year ago. They're projecting flatline growth year over year, basically little to no growth. However, in the first quarter, we saw their EPS jump up in a significant way. So hopefully they're just sandbagging their numbers and they come through with solid beats over the course of the next couple of quarters. But we'll have to stay tuned to their earnings and see how things play out. But do not buy a stock just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what does a house wear? Check the comments down below for the answer. Thanks for watching.